Welcome to another edition of From the Front Lines, how real estate managers are addressing COVID-19. This special edition is presented in partnership with NAA, CCIM Institute, and BOMA International. Our topic today is business interruption insurance. I'm here with Michael Perlmuter, CEO and General Counsel of Sill Company. Sill Company has helped clients successfully navigate the difficult property claims process since 1928, growing to become one of the largest and most highly respected independent public adjustment firms. Welcome, Michael.
Thanks, Suzanne, and thanks for giving me the opportunity to share some insights on these important issues that seem to be on every business owner's mind during this time of the pandemic. Before we get started, I wanted to say a few words about the coronavirus, about insurance policies, and about business interruption coverage, which I think we're going to discuss today. First of all, and most important to understand, is coverage for business interruption is a moving target. It's a moving target for so many reasons. First of all, and I just want to set the table with about 8 points I think it's important to understand before we jump into the questions, because it'll be a great connector, I think. For business interruption coverage to be triggered, policies require direct physical damage or loss. And we're going to get to that later, but that's probably the most important thing to hold in our minds as we go through this conversation. Number two, policies are drafted intentionally ambiguously by the insurance companies, leaving room for differing interpretations that generally are going to fall in favor of the insurance companies who draft these agreements. Three, many commercial insurance policies have endorsements that have virus exclusions. Four, and we're learning this every day as we watch television, which it seems to be all the news all the time is about COVID, we're finding more out about the COVID-19 virus every day. Five, we've probably noticed, you've probably noticed, your listeners have probably noticed, lawsuits are being filed almost daily now regarding business interruption coverage. There's ones filed in California, in New Orleans, in Chicago, and they're starting to spread out around the country. Six, state legislatures are beginning to sponsor legislation in their states clearing the path for business interruption claims. We don't know how this legislation, if it will pass or how it will be met by the insurance lobby, but the states of Ohio and Massachusetts have already proposed legislation. Seven, just yesterday there was talk of the federal government enacting some kind of disaster legislation to create a special fund with governmental oversight to assist businesses with insurance claims as a result of the pandemic. Where that will go, I'm not sure. But we have to remember that it's estimated by insurance groups that they would be paying as much as $383 billion a month if they were to accept all of the presumed business interruption claims that would come down the pike as a result of the COVID. So those are about 8 points that are important to set the table for you to ask these questions, because otherwise talking about this in a vacuum would be very hard for our listeners to understand.
Sure. So, Michael, generally speaking, what is a business interruption, and what then is business interruption insurance?
Sure. Well, two parts of that. One, business interruption coverage is generally purchased and in most commercial insurance policies. And the point of it, it's intended to compensate an insured for income lost during a certain period called in policies a period of restoration. That period generally is the period of time which begins at the loss and ends when the property is repaired or replaced or resumed at the permanent location as a result of a covered cause of loss. That's a lot of language there, but what that means in more layman's terms is we're more familiar with covered causes of loss like fires, tornadoes, hurricanes. People have insurance for that. And oftentimes, in addition to their building being damaged, or their personal property or business personal property being damaged, their business is also suffer. They could be shut down, they could be partially shut down, and entities purchase business interruption insurance for that economic loss that they suffered during the time that the businesses could be partially or fully shut down.
And what is your firm's experience in commercial real estate and particularly business interruption in this field?
One has to understand we've been in business since 1928. So for 90 years, we've been handling claims, dealing with real estate firms, dealing with the owners of all kinds of real estate, such as hotels and apartments and mall owners and strip malls and condominiums, office buildings, multifamily, and other structures such as religious or educational, manufacturing, distribution facilities, all in the real estate business. We've been handling claims as large as $100 million that deal both with the real estate industry and the business interruption, or as lay people might say, the disruption, the economic disruption caused by these perils such as fire, tornado, hurricane, etc.
So what type of insurance or provisions in a commercial policy would cover business interruption?
It is possible that commercial policy holders might have 3 or 4 kinds of business interruption insurance that could cover them for the losses that they may be sustaining during this time. Number one, we talked about commercial business interruption insurance. Again, if an insured has lost income as a result of an event like a fire, hurricane, tornado, and in this case, a pandemic, COVID, and we'll get into what that means, they may have business interruption insurance that obligates the insurance company to reimburse them for the income that they have lost following a peril, such as we're familiar with. The $64,000 question is going to be, does the COVID-19 virus constitute a direct physical loss or damage as contemplated by these insurance policies? These insurance policies are contracts. They're what's called contracts of adhesion, kind of one-way designed contracts by the insurance company, but they specifically state on what bases insureds have coverage or don't have coverage. And going back to the very first point I made when we started this conversation today, I said for business interruption coverage to be triggered, policies are going to require direct physical damage or loss. So that's where I just said the $64,000 question is going to be, does this virus constitute direct physical loss or damage? And that's where all the issues are going to come around. So number one, as we just discussed, business interruption insurance. There's a type of specialized coverage that also appears in many commercial business owners' policies called civil authority coverage. And the point of that coverage is it is intended to reimburse businesses for income that they've lost when civil authorities, government, issue orders which cause access to insured properties to be hampered. It's a very specific coverage, and it's very narrowly drawn so that the only way an insured can typically recover under a civil authority coverage provision is if an adjacent property to the insured's property is shut down by authorities as a result of a covered cause of loss. So, for example, in this regard specifically, somebody's business adjacent to the insured's property would have to be shut down as a result of the COVID-19 virus, which would have to be deemed by that insurance company to be a covered cause of loss. That is a very narrow area, and typically this coverage is usually limited to 30 or 60 days of lost income. So the amount of money that may be recovered by an entity who has experienced a loss due to civil authority order is probably going to be a little bit limited. There's a third area called contingent business interruption coverage. And I hate to drone on about all these specific coverages, but policies, as you probably have seen them, and I always say the same thing, no one in the history of the world has ever read their insurance policy. But they can be 200 to 300 pages long, and somewhere deep in the policy could be coverage called contingent business interruption coverage. What that means is that's essentially supplier-led coverage. If you have a business where you are being supplied parts to be incorporated into your full product, and that supplier's business has been disrupted as a result of a covered cause of loss, you may be able to collect under a contingent business interruption coverage matter. For the real estate business, this may have particular application, and people in the real estate business should look closely at their policies, because it is possible that they have contingent business interruption coverage for what we call leader or attraction properties. What does that mean? That means, let's say, for example, somebody owns a hotel, and that hotel was built or bought adjacent to an amusement park, for example. If the amusement park were to shut down or be shut down by the government of a governmental order like they are today, that hotel could be damaged in terms of income. It'll certainly suffer a loss of traffic. That hotel owner, if they have contingent business interruption coverage, could possibly and likely collect under that provision of their policy as a result of the leader or attraction property being shut down. The fourth area is really event cancellation coverage. This is what we are seeing more in the news than anything else. As a matter of fact, yesterday, I believe the All England Club announced that it was going to cancel Wimbledon for this year. And the All England Club also announced that it actually had event cancellation insurance. So if an event is canceled, not on a voluntary basis, but because of a physical or legal impossibility of holding the event sponsor may have a special policy or a special coverage called event cancellation coverage. And they're typically bought by insureds or event planners, not necessarily the venue owners, but the event planners. Those are the four primary areas of potential coverage that a commercial insured could have.
Specifically then, where would a commercial property owner or manager look for these inclusions or exclusions regarding business interruption?
Well, the most important thing is to read your policy. Sorry about that, business owners. You're going to have to pick up your policy and read it. And the likelihood is you're going to get to page 3 or 4 and you're going to throw up your hands and say, I don't understand this because this is written in such a convoluted manner that I can't understand. If a business owner is unfamiliar with the policy language in their policy, they need to retain an expert who is familiar with the coverage. I can look at an insurance policy that's 300 pages long and it'll only take me 4 or 5 minutes to look because so much of it is boilerplate. And if you're looking for the business interruption coverage in the policy, I know right where to go and look at it, at the proper sections. One can call their agent or broker, but they have to understand that there may be a conflict of interest between their insured's receiving a recovery and a broker's disclosure of what areas could possibly result in a recovery. They just have to understand that. And number 2, many brokers, they don't actually write the policies and they don't interpret them, they just sell them. So what an insured really should do is they should reach out to an expert, a public adjuster like the Sill company or a coverage attorney. Just because somebody's an attorney doesn't mean they're going to understand insurance coverage law. They should try to find an insurance coverage attorney who has expertise in this area. And the couple of things they want to look for in their policy is, does the policy require direct physical damage, or does it just require direct damage? There's a huge difference in case law between those two areas. If someone's policy says it only requires direct damage, they may be much further down the road to collecting for business interruption as a result of the COVID-19 crisis than if their policy says direct physical damage. Number two, do they even have business interruption coverage? Their policy, they're going to have coverage for their building, they're going to have coverage for their personal property, their business personal property. Do they have business interruption coverage? You have to look at a special business interruption coverage form for that. Next, they want to look at the limits on their declaration page. On the first page of everyone's insurance policy, or one of the first few pages of their insurance policy, is what's called the declaration form. The declaration form indicates all the various coverages that the policy has and their limits. What are their limits under the policy? What are their business interruption limits? How much could they possibly collect, maximized by the policy? And fourth, they really need to look for whatever endorsements or endorsements or exclusions could exclude recovery. As I said earlier, many commercial policies have virus and bacteria exclusions. If they have coverage, their real estate owners are going to be able to recover for all the economic damages they suffer. It could be lost rent, it could be lost food revenue, it could be lost bed revenue, it could be cleanup and disinfecting costs. They are all recoverable if it's determined that the insured has business interruption coverage.
I see. And what about contingent liabilities, those caused by a tenant loss or even a loss to a tenant as a result of a property issue?
I say this answer to everything that anybody ever asked me in two ways. One, it depends, and it's a gray area. There's nothing that's particularly black and white about the insurance industry. It's all in the gray areas, and that's where the coverage attorneys and companies like the Sill company, public adjusters, work. We work in the gray areas. Typically speaking, policy owners will have coverage for all the lost income that they suffer in whatever way possible. However, if they're tenants, if somebody owns an office building, a strip center, and their tenants suffer losses, that's not going to be covered in the policy owned by the landowner or the landlord. That will not be covered. Those kind of contingent costs will not be. That is going to be the responsibility of the individual tenant and their insurance policies.
So just how difficult will it be to get insurers to pay out on a claim, and what could a policy holder expect here?
It's going to depend on what the policy says, but generally speaking, in order for a real estate owner to collect under their policy for economic damages that they have incurred as a result of this coronavirus, they're going to have to be able to show that they've incurred direct physical damage. If they can show that they've incurred direct physical damage and they do not have any exclusions in their policy, they will likely be able to collect. But as I said earlier, the $64,000 question is going to be, does the presence of the COVID virus constitute direct physical loss required by the policy to trigger business interruption coverage? And it may not be in direct response to your question, but I think this is a very important area to cover right now. Insurance companies are going to say no. They are going to say that the COVID-19 virus is not the type of direct physical damage contemplated by the policy to allow an insured to recover under their business interruption coverage. However, advocates like Sill and advocates like coverage attorneys who represent insureds are going to say yes. And importantly, some courts have found that the presence of harmful substances such as odors, toxic gases, fumes, smoke, asbestos, and ammonia may render the property uninhabitable or unusable to constitute direct physical loss and allow insureds to recover under their policy. What is going to happen is insureds are going to make claims. Insurance companies are going to respond either that the insured does not have coverage because the coronavirus is not a direct physical loss as contemplated by the policy, or insurers are going to respond and say they're going to write what's called a reservation of rights letter. The reservation of rights letter will essentially refer back to the language of the policy in great detail and then probably say towards the end of the letter, please provide us any tests, any reports, any evidence that you have that shows the existence of COVID-19. That is going to be a very difficult hurdle for insureds to leap over. It is the way that insureds can leap over that hurdle probably is going to be if one or more of their employees have contracted coronavirus and these employees don't have relationships outside the workplace, it can be presumed that they contracted coronavirus in the workplace and therefore COVID-19 exists in the workplace, is a physical loss that is contemplated by the policy, and perhaps they can collect. If they don't have any employees who have contracted coronavirus, the claim is going to be much, much more difficult for an insured to make.
And in that same vein then, what evidence, background, or records would an owner or manager need to keep and provide in support of a claim?
Absolutely. If an insured can jump over the hurdle to get coverage, they're going to have to then prove what their loss or damage is. So what do we advise insureds? Begin your record keeping immediately. Whether you believe you're going to make a claim or not make a claim, still begin your record keeping immediately. Keep track of the exact date that your operation was shut down. Was it shut down as a result of government-imposed restriction? Was it shut down because you actually had COVID in your facility, as evidenced by one of your employees contracting it? Keep a record of that. All states have different dates on which they were shut down. Number two, companies like Sill calculate the damages that insured businesses suffer as a result of these shutdowns, and we document it and present it as evidence to the insurance companies to allow an insured to collect. We typically use the normal revenues and expenses of a company as a baseline, and then we ask an insured to track any changes in their company policy, any correspondence they may have with customers or tenants. This is going to be particularly important to your clients who have buildings where they have tenants. Right now, tenants are contacting their landlords on a daily basis, because we've been in touch with plenty of landlords, and saying, I can't pay my rent, I need a reduction, I need complete freedom of not paying rent for a period of months until my business is up and running. The landlords need to keep track of any correspondence that they have had with tenants requesting and providing any reduction of rent, which was a result of the virus, and as well as any extra expenses that the landlord has incurred. Maybe they've made some changes to the property, maybe they've cordoned off certain areas, et cetera, et cetera. Anything that they do which is above and beyond what the normal expenses of operating the business should be tracked immediately by all insureds.
Can you provide an example or a case in which a claim was successfully executed?
There are really two what I call seminal cases in this area. One is referred to as Motorist Mutual Insurance versus Hardinger, and the other one is Gregory Packaging versus Travelers. And in the Motorist Mutual Hardinger case, E. coli bacteria was determined to constitute direct physical loss to a structure and allow it insured to collect under their business interruption coverage. In the Gregory Packaging versus Travelers case, there was an ammonia spill inside a plant, and the ammonia spill was deemed to make the business plant not occupiable, not operable until the ammonia was dissipated. Lastly, court after court has held that airspace is recognized to be real property because insureds will see insurers push back against that concept. They will say, maybe you have COVID in the air, but your airspace is not the walls. We've insured the walls. We've insured the machinery. We've insured the roof. We haven't insured the airspace. That's not true. Airspace has been recognized to be real property, so that if COVID is actually detected in the air, that can be a direct physical loss or damage.
Michael, what other advice would you give to real estate managers at this time?
The advice we give is read your policy. If you don't understand your policy, retain an expert who will understand your policy and can give you some advice. Make a claim with your insurance company now. Do not wait. Policies require that if there is an event triggering coverage, the insured make an immediate claim. Failure to make an immediate claim could compromise the insured's claim and could even result in the insurance company disallowing the claim for failure to make a timely claim. Then, as I said, begin record keeping immediately. After you make your claim, you're going to get a response from your insurance company. They are not going to accept the claim in this area. They're either going to reject it or they're going to send you a reservation of rights letter asking you to prove that you've experienced a direct physical loss. Once you get that letter back, you want to contact a company like the Sill company. We can evaluate the letter. We can tell you what your likelihood of recovery might be, or a coverage attorney who specializes in representing insureds. These claims are ultimately going to have to be litigated, and this litigation will go on for years. An insured's goal is to get to a jury. If an insured can get to a jury, if they can overcome what's called a motion for summary judgment because there's a question of whether there may be direct physical damage, then they're going to place their faith in 12 people in similarly situated positions against an insurance company. We're optimistic that if an insured can get to a jury, they can recover under their business interruption insurance for damages, economic damages suffered as a result of the coronavirus.
Great advice, Michael. Thank you so much. Any final thoughts?
We've covered a lot today. We've talked about a very technical area of the law called insurance law, dictated by the contract between the insured and the insurer, which sets forth each of their rights and obligations. As I said when we first began, this area, this territory is changing daily. It's changing as a result of things we learn about COVID. It's changing as a result of the acts by legislatures, both state and perhaps federal government. But we are advising all of our clients the same way, and I will tell you my inbox fills up every single day by 9 o'clock in the morning and refills at 12 and refills all day. What should we do? What should we do? As our clients ask us questions. Make a claim today. Make it in a very general way. Reference your business interruption coverage. Reference civil authority coverage if you have that in your policy. Reference contingent business interruption coverage if you have that in your policy and that's where you've suffered your loss. Make the claim today and then hire the best insurance coverage attorney or the best public adjuster you can hire after you get your response back from your insurance company, because this is going to be a battle. Hopefully the state legislatures will reach out, pass some laws and aid insureds. If they do, that'll be a fantastic day for insureds. I think it's going to be ultimately essential. I think it's going to be ultimately essential that the federal government steps up and creates some type of special fund. Otherwise, I think we're going to see a lot of businesses going out of business as a result of the lost income that they incur as a result of the COVID. This will not be an easy road, but for companies who have suffered economic losses, reach out to professionals, because people like us and people like coverage attorneys handle these claims every single day, and this is not that complex for us.
Thank you so much again for your time, Michael. This is extremely valuable information for the investment real estate industry, right now and always. If you have a question about your insurance policy, you can email Michael directly at the address listed here. You can even attach the policy itself. Additional resources are available at the Sill LinkedIn page listed here. As always, please continue to visit the IREM page, dedicated to providing updates and resources to support real estate managers in making informed decisions during this time. You'll find additional resources provided by our partner organizations, NAA, CCIM Institute, and BOMA International.